Right, so in these questions, this first question here, we are looking at knowing the difference between a cash transaction, a revenue transaction, or something that's both, that will affect both, and knowing if we do or not need to account for it if we're looking at cash. Because for everything we've been drumming into for level 2 and level 3, it's all about the matching rule. We have all the expenses in, irrespective of whether we paid for it or not. Whereas now we're actually looking at, we don't want the expenses, we want the actual cash, because the units cash and treasury is what we're all about. So we've got some. Task 1 is going to be automatically marked. You do have quite a few written questions in this exam, but task 1 is quite a nice one to start with. So we've got here some statements, the true or false. Don't believe in these blank. There's no negative mark in AAT. You've got a 50-50 chance. Don't believe in the blank. Really. So the first one is about the revaluation of a non-current asset. Will that have any impact on cash or not? So that's us. We've got a factory and we say it's now worth £100,000 what it's worth before. Do you think this is true or false? So a lot of people going false. So if you've got a factory that you bought for, let's say, £1 million, and you bought it ages ago, and then you say, you look around, look at all the other factories near your factory and say, they're all gone up in value, the ones being sold. I reckon mine's worth now £1.5 million. So in your accounts, you increase the value of what you think it's worth. How would that affect cash? Well, the answer to that is, yeah, it wouldn't. Revaluation only affects cash when you sell it. So the revaluation, the double entry would be, which you wouldn't have to do in this unit, but the double entry, if you did statements, would be debit the plant, property and equipment account to increase the asset of that, and credit revaluation reserve, because you think it's gone up in value, but you don't know it until you actually come to sell it. So it won't have any impact on cash until you until you sell it, basically. What about a repayment of a loan? Is it true or false that it will impact both profit and cash? So we owe some money and we go to the bank and say, here you are, here's your money back. Is that going to affect our profit and cash, or just one or the other? So we think it's true or false. Yeah, you're right. So what will effectively happen is you will have some money in your bank account and you'll owe some money to the bank. When you pay them back, you'll have less money in your bank account because the money's gone, but you'll owe less. The only thing that relates to loan that affects profit is the interest that is accrued, or the interest that the bank will charge you on that. So if you repay it, you're not going to get any interest charges or anything like that. It just means less cash, less liability. And then the last one, the cost of clearing up a flood would be classed as an exceptional transaction. Do we think this is true or false? Yep, you are right that it is true, but in reality, it depends on your definition of a flood. Someone leaves the office sink overflowing and you have to mop the floor, probably not exceptional. The entire office comes under 4 feet of water, probably argue that is exceptional. Cool. Not a bad start to this task. Now, the next bit is, this is where we're going to get our calculators out, which is all we're itching to do. So we've been given some transactions in TRT Limited, the year ended. And effectively, what we're trying to do here is go from the profit figure in the accounts that they've given us, which is 56,740, and adjust that to the amount of cash we have generated or not on our trading activities. Bit like if anyone has done drafting, interpreting financial statements, a statement of cash flow. Really, say like, it's very like, should we say. So what we're looking for here is all this, we've got all this information here, and we're looking for things that will have affected our profit but or they've affected our profit, but not, or it will have affected cash, but in a different way. So if it's something, a very straight example would be you write a check out for £1,000 and it goes out the bank, profit goes down by £1,000, cash goes back down by £1,000. We're not interested in that. We're looking for things that would lead to a difference between what our profit figure shows and what our cash figure shows. So it's a case of working through these, deciding which of these would give a difference between profit and cash, and then just as crucially, in what way. So the first one is increase in trade payables. So if we have an increase or decrease in our trade payables, would that lead to a difference between what we're reporting as profit and what we're actually getting as cash? Do we think it's going to lead to a difference between the two, firstly? Or is it going to affect our profit and cash equally? Anyone for anything else? I've got an answer. The answer to that is yes, it would, because when you buy stuff from your suppliers, you'll put all the expenses in. You get an invoice and they say 30 days credit, you put that invoice on straight away. Now, if you've not paid it as yet, it's not affected cash straight away. So any change in trade payables is going to affect your cash in a different way to how it affects your profit, because the profit will have all the invoices in, the cash will only have the invoices you paid. So as Ross has actually quite correctly said, so our trade payables is going in here. And now it says we've got an increase in trade payables. We owe more than we did at the start of the year. Now, owing people money, your natural assumption is this is a bad thing. From a cash point of view, this is a good thing, because you've not paid someone, the money sat in your bank account and not theirs. So the money's in your bank account, either earning you interest or saving you interest, which in this day and age, not significant. So this is actually increased cash. So my dad, who was a very tight farmer from Yorkshire, they don't get any tighter than that, a Yorkshire farmer, he would not pay people for ages because he's tight. And the money is better off in his business account than someone else's. So he would take the view, if you get you get a statement at the end of every month showing how much you owe, he would argue they wouldn't put a 90-day box on a statement. They didn't expect you to use it. So he'd pay people till they pretty much threaten him. And then he's not the best person to deal with in business, but it is what it is. Right, the next one, loans repaid during the year. Do you think that is going to affect our profit in a different way to our cash? Yes, no, maybe. Now, remember what we are adjusting here. We're adjusting our profit. Would a repayment of a loan have affected our cash? Yeah, you're exactly right, Ross. It's already affected our cash. It had no effect on our profit. As we said before, it's just money out the bank, money to the bank that we owe the loan to. So we're not going to adjust that. Whereas a profit on disposal of non-current asset, is that going to affect our profit in a way to we need to adjust it to get to the cash position from this? Yeah. So the profit, we increased our profit because of this disposal, but a profit on disposal is literally just an accounting profit. It's basically, we depreciated it at a rate that we've guesstimated at best, and we just happened to have sold it for more than what we've depreciated it, which we will come to in a bit. So whilst we think we made a profit of 2,100, we haven't. So we've increased our profit, but it won't have increased our cash. Now, it will have affected cash down the line, because that will be the proceeds we get, but that is something else we'll deal with later. We're adjusting our profit here. So our profit, we've increased it previously. We need to decrease it to pull out the effect of this profit on disposal. But the next one, depreciation, the most common one you are going to see. I won't ask because I'm sure you all know this one, but depreciation is so common in these types of questions because all companies have depreciation in the accounts. You're exactly right. We're going to add it back on. Depreciation is just an accounting provision for the fall in value of your assets. And like I said before, it's only an estimate. You say, I don't know, our machinery falls by 20% year on year. You're not going to be right. There's always going to be a bit of difference. But you're just putting a provision in, and then at the end, you'll deal with a profit or loss on disposal. But you've got to show that over time, assets are falling in value. But you don't pay any money out. It's just an accounting provision. You debit the depreciation expense account, credit accumulated depreciation. We don't touch the bank account. So it's decreased profit. It's not touch cash. So we're going to add this one back on. Give us 16,540 to add back on. Next one, purchase of delivery van. Do we need to adjust our profit figure for this? Yeah, exactly, Ross. I mean, there will have been some depreciation on it, but that's dealt with what we've just done. The actual purchase of it doesn't affect profit. It's a capital item. So we're going to ignore that. And then the next one, decrease in trade receivables. So people owe us less money than they did at the start of the year. Kirsty, you're exactly right. We need to adjust this because when we send out we'll put all our sales invoices through. Whenever, because that's how the system works. So we put every sales invoice through. But cash-wise, it only affects cash when they actually pay us. So if over the year, let's get my figure in, people owe us less money, you think, oh, people owing us money is a good thing. But actually, from a cash point of view, if people owe you less, that means because they've paid you more than they previously owed you. So this is actually a good thing for cash. So we'll add this back on, as everyone said. So the last bit, tax refund. Now, obviously, we're not going to adjust this because we run out of space, and that would be a bit of a giveaway. But why would we not adjust for the tax refund? Anyone? Well, I mean, if you think of our profit, it's our operating profit. That would be that is before our tax charge. So although we get a tax refund, if we would have adjusted in previous year's tax charge, which is below our operating profit anyway, and then it just gets received. So it does affect cash, but it doesn't affect our profit. So our profit is profit before tax. So that's why I ignore that. Cool. What time is it? 17 minutes past. We're doing all right. Right, next question. All right, actually, any questions on that before we move on? I'll show off my FI mug. Right. We've been asked to calculate the dividend paid, and we've been given last year's figures and this year's figures. Now, the first thing I like to do in these types of questions is get it clear in my mind which way we're going in terms of years. So in terms of time, we go that way. Don't get it wrong, assume we naturally go left to right. Not always the case. So if you get it the wrong way around, you will get the question wrong. So the first thing is get it clear in your mind which way time goes. And in this question, time's going backward. So we're looking for dividends paid. What here out of A, B, and C is going to be affected by dividends paid? Because that's the figure that we'll then have to use to calculate it. So which of these are affected by dividends? That's right, retained earnings. So dividends are paid out of profit after tax. So the profit after tax is not affected by if you've got a dividend or not. And loans have literally nothing to do with dividends. So we are not going to do anything with that. So it is retained earnings. So I think in the model solutions is they use a T account, which 99 times out of 100 use a T account, but everyone's different. Everyone's mind works in a different way. I don't like to use a T account in this, but knock yourself out if you want to do one of these things. The way I think of it is at the beginning of the year, we had £69,740 in our retained earnings. Then what goes into our retained earnings? It's our profit after tax. But remember, it will be our profit after tax of 2001. So we're going to add on 20550, which means at this point here, our retained earnings should have £2,290 in. But it doesn't. The reason, well, it's not the reason, what it does have is £75,210 in. So retained earnings, basically, profit goes in, dividend goes out. So the only reason, the difference between the opening retained earnings plus profit and the closing retained earnings, it can only be because of dividends paid. So 90,290, if we've got 75,210 at the beginning, we must have paid dividends of £15,080. Does everyone see where that comes from? If you wanted to T-account it out, feel free. You know, retained earnings, you'd have it on the credit side as an opening, 69,740. Put on the profit of, what was it, 20550, and then you've got carried forward, which would be 75210. Balance it off. If you want to do it that way, do it that way. I like to do it that way. Everyone see where that figure came from? Yeah. Like I say, there are different ways of doing this. Just do what works for you. Now, whoever formatted this needs to look at themselves. We've got the question over the page, which I don't really like, but it is what it is. So we've been asked to see what has happened during the loans during the year. So at the beginning of the year, we owed 16,500. At the end of the year, we owed £25,000. So out of a choice of A, B, C, and D, what do we think happened during the year? Was there a repayment of £8,500? If you see the question, the numbers anyway. Receipt of 8,500, receipt 25,000. Oh, the last one is repayment 16,500. Yeah, the answer to this is B, because at the beginning of the year, we owed 16,500. The amount that we owe has gone up. It's gone up, so we must have received more money from the bank account and received it by the difference of 8,500. Cool. What do you think, task one? If that was the first thing you saw in the exam, do you think you would be comfortable with that in terms of picking up some marks? Yeah, it's not a bad one, really. Well, right, we've got loads of information here. We'll skip all that. A little bit of an intro. Right, let's have a look. We're going to look at task 2 this evening. I'm going to finish off on that. So we've got index numbers. Who likes index numbers? Anyone? Do you like them, hate them, or are you just literally indifferent to them? I quite like them. I've got a rule with index numbers, and it works whether you're going forward in time or back in time. Divided by what it is, multiply by what you want it to be. Simple as that. Index numbers are quite good. I like them. But that's the rule. It doesn't matter whether you're going from year 1 to year 4 or year 4 to year 1. Divide by what the index number that it currently is and multiply it by the index number that you want it to be. Simple as that. Cool. So Go Cycle Limited sets the price of a bike on the first day of every quarter. The price for the last 2 quarters, the index for the next 2 is given in the table below. We still need to calculate an index price for the bikes using quarter 1 as the base, really important. Then use index figures for quarters 3 and 4 to determine the price. And actually, index numbers in reality are quite an important thing. What with inflation, when you come to pricing decisions of what do we want to be charging next year, it was all right when inflation was like 1%. You could absorb not inflating your prices over time. When inflation is 10%, you really do need to be indexing those numbers up, or you'll be really hitting your margins, if not making a loss. So we're using Q1 as our base period. So that is going to be 100. So the first thing we need to do is calculate the index number for Q2. Now we don't need to do it the rest of the question, but that's us to do it, and you'll get a mark for it to do it. So if you're going the other way, you're going from actual numbers to index numbers. You take the actual number that it's moved to, which is 206, divide it by the index number that it's moved from. So we're looking effectively what percentage has it increased by from Q1 to Q2. So divide it by what it was and multiply it by 100, which I'm not going to use my calculator, but even I can do that. It's exactly right, Kirsty. It is 103. So 206 divided by 200 is 103, and then multiply by 100 because it should really be a percent, an index number, gives us 103. So that's the index number for Q2. Does everyone see where that has come from? So we've just worked out the percentage that the actual price has increased by to Q2, and then that percentage effectively becomes your index number. Whereas we're now going to go the other way. So we need to increase Q1 by take it from the index number that it currently is and multiply it by the index number that we want it to be. So this is my divided by what it is, multiplied by what you want it to be. So Q1 will be 200, divided by 100, multiplied by 104.5, which I am not doing that in my head. So 200 divided by 100, I shouldn't have done that in my head, times by 105 gives us a figure of 209, as everyone else has got way before me. And then we're going to do exactly the same for Q4, but obviously our index figure has moved on a little bit, and it's now 106.42. That's a bit of a nasty one. 642 gives a figure of £212.84. Have we got that? Yeah. Cool. So now we have our pricing for those quarters. We've now been asked for the total sales receipts for Q3 and 4. So it looks really complicated, this sort of question, but it's actually lots of quite small, relatively straightforward questions all added together. And the other thing I'd say is there's loads of calculations in this. If you do a question like this and you make an error, the answer at the bottom is clearly going to be wrong. But you could have got loads and loads of marks. You'll get the marks for using your own figures. So if you do a question like this and your cash figure at the end is wrong, don't think that you're going to fail and you're going to lose all the marks. There's a lot going on in this. But like I say, each one is relatively straightforward compared to some of the other things. So take it slowly and steady, really, really carefully, read all the information, and you'll do really, really well. So here we get our number of units, multiply it by the price per unit, gives a figure of 2,000 times by 209 is £418,000. And then likewise, make sure you get the right number of units and the right price at 212.84. You have £510 and £816. Everyone get that? Should be one. Yeah. £510, £510,816. It's been a long day. Right. So now I've got sales figures. The next bit, we need to move on, and we're looking at purchases. Now, this is where it catches a lot of students out. This catches a lot of students out at level 2, level 3, level 4, catches people out in statements. The difference between markup and margin. You need to be clear about the difference between markup and margin. So we're achieving a markup of 25%. So if we're using markup, it is the cost of sales which dictates the sales price. So we're adding a profit onto the cost of sales, where if it's margin, the sales figure, we take a percentage of that and that dictates the profit. So with markup, which we're using, the profit figure is dictated by the cost of sales, whereas margin, the profit figure is dictated by the sales figure. So if we've got a markup of 25%, what do we need to do to £418,000 to get to our cost of sales figure? Effectively, you've got one or two things. Multiply it by 75%, if 25% is profit, 75% will be cost of sales, or do we divide it by 1.25? Or multiply it by 1.25. I want to throw that out. Right. So what we're going to do here is, because we're using markup, our cost of sales must be dictating what the profit is, and therefore you just add the profit to cost of sales. That gives you the revenue figure. So the revenue figure must be 125% of the cost of sales. So what we need to do is go back to our cost of sales, and what we're going to do is divide it by 1.25. So our revenue figure of 418,000, 1, 2, 3, is our cost of sales plus 25% profit, giving us our revenue figure. So if we divide it by 1.25, we go back to our cost of sales, which is £334,400. Does everyone see why I've divided it to go back to the cost of sales rather than multiply it by 75% or whatnot? If we think of a relatively simple example, if our cost of sales was £200 and we wanted to add a markup of that of 25%, 25% of 200 is £50. 2 point, come here, would give us, so what that by 25% gives us a revenue figure of 250. So that is our revenue figure. So if we want to go from revenue back to our cost of sales using markup, we need to divide it by 1.25, because previously, to go from cost of sales to our revenue, we've increased it by 1.25. Yeah, I mean, the thing, again, this is maths and people's minds work in different ways. If you've got some little acronym or something like that that works the difference between markup and margin, that's great. But markup and margin really important in this unit. If anyone goes on to do statements, or even, I think, applied management accounting, I think that's got markup and margin in as well. Anywho, £410,816. Again, same principle, 1.25 gives us a figure. So 510,816 divided by 1.25. We'll go around that. 408,653. So now we've got a revenue figure. Now we've got our cost of sales. Now we've got some extra information just to make things even more complicated. So Go Cycle is investment in a Spanish company is due to receive a dividend of €250,000 in Q4. An exchange rate used to convert the receipts is €1.10 to £1. I'm kind of hoping when I get my euros, I'll get more than €1.10, but probably not the €1.47 I used to get many, many years ago. Anyway, yeah, our holiday mode still at work. So we've got that to deal with, and then we've got some payroll to deal with. So we've been given our payroll cost for the quarter. The net pay is paid in the current month. So that is what we pay our employees. They get paid at the end of every month. And then the PAYE and NIC is paid in the following quarter. So this is the PAYE of Q3 and 4. That is going to be paid in the following quarter. And And that is it. Now we just need to put our figures in our pro forma here. So apologies, it's going to be a bit of up and scrolling, up and down with this. My memory is shocking. 418 and 5108, 6. 5. Help me right. 510, 816, wasn't it? 16, and that was 418. I can't remember that cost sales. So we've got 334, 400. Not remember the other one. And then the other one was 48653. Cool. So the first one we're going to deal with, because we're going to have to deal with them all, shall we deal with the dividend? Not dividend. Yeah, it is a dividend. So 250,000 euros. You get €1.10 to a pound. So you're going to multiply it or divide it by 1.1. Yeah. So when I am in Italy on Thursday and I buy a pint of Peroni and I get €1.10 to it and I work out what it's going to cost me, I'm going to divide it by €1.10, because for every pound you get €1.10. So you're getting more euros than you are per pound. Just so to go from euros to pounds, we need to divide it. So our pounds that we're going to receive is going to be 250,000 euros divided by €1.10 gives us a figure of sterling that we receive of 227,273, rounded that 227. Everyone see where that came from? $273. Cool. So dealt with that. You won't be able to do this, but let's cross it out because we've done it. And we've got payroll costs. So we'll do the net pay first. So net pay is paid in the month that it is incurred. So we'll look at quarter 3 and quarter 4. So quarter 3, the net pay, that's what we're going to pay our employers at the end of the month. It goes out in that month. So we've got 57324. And then we've got 60243. So yeah. Now the next bit is what is due to HMRC. Now, none of you have done tax processes businesses, but this is due on the 19th of the month following, in reality, but it is due on the following month. So what we're going to pay in quarter 3 will be our liability from quarter 2. So that's going to be 7645 plus the 2043 gives a figure of 9688. So it's going to be, that's what's going to be paid out in quarter 3, even though it relates to quarter 2. Then quarter 4 is going to be taken from quarter 3. So that's 7954 plus 2243 gives a figure of 10,197. Everyone see why I've shifted these along a little bit? With 9688, and that was 10,197. So we've now calculated all our figures. Now, even if there was a bit you struggled with, say the dividend bit, and you think you got it wrong or you've not done it, doesn't matter. Don't give up. You will get marks for adding stuff up, which, in a level 4 exam, that's about as straightforward as it's going to get. So make sure you do this bit, because you will get marks from adding this up. So total receipts it is what it is in quarter 3, whereas in quarter 4 we've got 2 numbers to add together. Here's a figure of 738089. And then likewise, we want to get our total payments. We don't want to be losing these marks. So we've got 334 100, missing a 4 there, 334, 400, plus 57324, plus 9688, so you have 401, 412. And then lastly, 408, 653, plus 60243, 243 is it? Plus 10197, gives a figure 479, 9, got 9 that's meant to be. 10 that's meant to be. 479093. So then we want to work out our net cash flow. Now this is actually quite important because it's not just taking one number for another. It's really important to show if it's a positive cash flow or it's a negative cash flow. That's more important than the number. Well, they're equally important, should we say. So we've got £418,000 coming in. Take off the 401, 412 going out, means we've got a positive cash flow, £16,588. If it is negative cash flow, make sure you point out that it is negative, because if not, you will lose the marks. It's all very good. The examiner goes, yeah, they know what they're doing, but if you do not show it in the format they want, like it says there, you will lose marks. Well, not lose marks, you're chucking marks away. So we've got a positive net cash flow of £16,588. Now we had an opening bank balance of negative £12,000. So when you take that off, so at the end of Q3, we've got a closing bank balance of positive £4,588, which is our opening bank balance for, what's it doing? For the following quarter. So now we need to work out our net cash flow for Q4, which they've got a dividend. This is always going to be positive. So we had £738,089 coming in. We spent 479,093, figure of 258,996. $258,996. So that's positive cash flow. Now, if we already had at the beginning of the month a positive cash flow of 4,588, means we'll end up with £263,584. Now, like I said before, this figure here, if you make one error, one typo, one miscalculation, that figure is going to be wrong. That does not mean that you haven't absolutely smashed that question and done really well and got loads of marks by any means. A bit like a tax comp, if you figure at the bottom is wrong, obviously you got an error, that does not mean by any means you failed the question. It's more that when the, it's not a mark because it's automatically a mark, but when the computer comes down to mark, it'll be like, yes, 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 yes. And look how many figures there are there, and it only needs one to throw it out. Now, the secret to that is slowly, steadily, take it piece by piece and read the question. Don't get overawed when you've got all this going on. Has anyone got any questions on that? Do you think with plenty of time, you'd be able to have a fair bash? Task 1 and task 2. Yeah, it is pretty long. The main thing is keep calm. Keep calm. Don't get flustered and just work slowly, methodically through it. The main thing is you don't want to be, what you don't want to do is sit here and go, oh, I went the wrong way with my euro calculation. I increased it by 1.1 rather than divided by 1.1, because then at that point there, you're going to have to, if you change that dividend figure, you're going to have to change that figure. Then you're going to have to change that figure. Then you're going to have to change that figure. Do it once and do it right, or as best you can. Don't be rushing, then have to rejig it, because then that will absolutely kill you for time. Slowly, methodically. If you do it once, you'll have plenty of time. Cool. Right. Any questions on anything? cash and treasury, or even AAT related whilst we are still here. Well, one of my colleagues, I don't know who at the moment, because I won't be here, will be with us, hopefully Catherine's back, on Wednesday evening, 7 o'clock. Like I say, if you can't make it Wednesday evening, you signed up, so you'll get the recording, and then we're back on Monday and Wednesday of the following week. But I don't see you before. All those exams, good luck. Do your mocks. Do your mocks. I cannot stress this enough. Without going off on a rant, I was looking at the personal tax results that came in last week on Thursday. Of those that had passed the exam, on average, they'd done 1.5 something mocks. Of those that had not passed the exam, they'd done on average 0.16 mocks per person. Cash and treasury is very light. Personal tax, very standardized. If you do your mocks, you pass the exam. And even there were a number of students that had done the personal tax mocks, they hadn't passed it, but the act of doing a mock meant they passed the exam. There was just do your mocks, cannot stress it enough. Exam standard questions are key. You're going to have to do it on the real day, so why not do it in preparation? And on the real day, you're literally just doing what you've done many, many times. If not, let's say good luck. If anyone's got any questions or queries about anything, if you're a first interested, you should reach out to your student tutor. If not, I'll give you one last chance to ask questions. I'll let you go, and I'll see you in some either. Coming up, we've got Facebook Lives, we've got open days, we've got all our revision classes are coming back in full force in September. And I'm teaching, anyone wants to come back for next year of business tax, I'm teaching that. That's all my teaching. If not, cool. Right, have a good evening, everyone. Have a good exam. Very good question. If you're running out of revision time and you've either got mocks or practice questions to do, is it best to skip mocks? Yeah, in a perfect world, you'd have all the time in the world to do all the task bank, for a first interested student, mock 1, mock 2, mock 3, mock 4, and the AAT mocks. If you didn't have much time and you could only do one thing, do mock 3, do mock 4 for a first interested student, because they come through to your tutor to mark. And when you get your result, that will take into account your written tasks. So if you go and do mock 1 and 2, even if you mark them yourself, it's very hard to mark your own work because you're not as objective, and you go, well, I knew all, then I'll give myself the marks. And you tend to find two types of students. One who writes something really, really good and thinks, well, it's different to model answer, so I won't get any marks. Or someone who goes, well, I filled the box, so that's going to be worth 20 marks. Neither of those situations how it works. If you write something sensible, relevant, and answers the question, you'll get the marks. It doesn't have to be the model answer. So that's, the mocks 1 and 2 are quite hard to mark yourself. So if you want send it into your tutor mark, please do. Or you've got the AAT box. AAT mocks will tell you you're competent or not yet competent, and they will base that on 70% of all the automatically marked questions alone. It will pretend that the written stuff does not exist. So if you're really, really strong on your written questions and it tells you failed, it's ignoring the fact that you're really strong on written questions. If it tells you that you've passed, but your written questions are less good, should we say, and they will drag you down, it will give you a false sense of security, because the percentage is not based on the overall marks available in the exam, it's based on the automatic stuff. So if you had to choose and you only do one thing, mocks 3 and mocks 4, it should be marked by someone objectively, and it will take into account your automatically marked stuff and your written stuff, like in the real exam. In terms of revision, you're not looking for mega amounts of revision. 4 maybe, a couple of weeks on the task bank, 1 week on the mocks, our mocks, and then AAT sample assessments. It's not a huge unit. It's not one you want to drag out forever. A lot of this is just practice, and you'll come when you do this, like for example, cash budgets, you'll see the same thing time and time again. There was always going to be depreciation. There's always going to be profit or loss on disposal. Different numbers, obviously. Trade receivables, trade payables, always going to be there. But it's just practice and knowing, go, right, trade receivables has gone up. That's going to kill us for cash, or vice versa. Just practice, but not loads of it. And the same with any level 4 exam. You're not going to go into that exam absolutely knowing you're going to get 100%. No one really gets 100%. You need to be good enough which AAT put at 70%. So you want to be consistently getting 80s, 85s in your mocks. And if you're doing that, you'll pass the exam. So it's a fairly fair exam. If you know your stuff, you pass. If you don't, you won't. That's how it should be. Really? Cool. Anyone for anything else before I let you all go? If not, have a good evening, and I'll see you at something down the line. All right, good night, all.